Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel Alcanan, along with Brianna Valesky, and we have Rob Roy on the line. He's a trading coach with Better Trades. Rob, how you doing on this Monday morning?
I'm doing well, Joel. Thank you for having me today.
Okay, well, thanks for coming on to the show. How long have you been active, and how did you get started in the markets?
Well, I got started back in 1997. I took a workshop, a two-day workshop similar to one that I teach, and have been trading ever since and training people to trade ever since 2000.
And what kind of qualities do you look for when you're, trying to bring in a trader and develop a successful trader?
It's really going to take someone with the right mindset. I don't think there's a person that cannot be trained to do it. I think it requires the desire, and it's repetition. It's doing it over and over again. Too many people think they can come in, try to place 3 or 4 trades, and become successful at it. It's the repetition. That's one of the keys that I focus on as a trainer, as a coach, is to make sure that people are doing it over and over again to get that repetition, to convert that knowledge they've developed into a skill set.
Okay, all right. Moving on here. When people think about trading, they think, okay, I got to be at the screen, I got to be glued to the screen, I got to follow the markets, constantly. What's your thoughts on that? Do you necessarily have to be in front of your computer all the time to trade the market?
I don't think it's a requirement. I actually think it can be a detriment for most traders. They don't have the mindset to deal with the slight ups and downs. And if they're looking at a very short-term chart, such as a 1 minute, and they're following that, and you see this huge candle pop on your screen, and it's, oh no, it's going up, it's going down, I should get out of the trade, and Apple just moved 8 cents. So they really concern themselves too much with these slight moves intraday. To me, I'm a firm believer, unless you're a scalper, a day trader trying to get in and out multiple times a day, put your order in, set your targets up, your exit in place, and walk away. And whatever it does, it does. You're going into that with the mindset of, Joel, think of going out to lunch today. You're going to spend $10, $20 on lunch. You didn't lose $10 or $20 on lunch. It was a cost of doing business. You knew, you planned for it. Well, if you plan in your trade that if X goes against me, I'm going to be okay with that, then that's what you plan for. And you set it up that way and walk away and let the trade do what it does.
Okay. Fundamental versus technical analysis. A little mixture of both, or which one do you favor?
I don't deal very much with the fundamental component of it. To me, it's built into the chart. I'm a technical trader by nature. That was the way that I was trained. The earnings per share, I don't think it's a bad thing if you're an investor and holding long term, but I'm a short-term trader, a couple of hours, a couple of days, possibly a couple of weeks. So I think the fundamentals are built into the chart, so we focus very heavily on technicals, not on the fundamental aspect of it.
Okay, and boy, there is such a mixture of definite, technical indicators out there. A lot of people get caught up in paralysis analysis. If you had one technical indicator that you would just the only one that you could have on your chart or trade with, what would that be? What technical indicator would that be?
Hands down, doesn't take 1 second to come up with, Joel. It would be an indicator called Fibonacci. It is a mathematical calculation and many people look at it and are concerned that it is math, and it is not really math related, right? So, you have to know math to do it, but you will find this everywhere in the universe, including inside of the human's DNA. Your major and minor helix in your DNA have a 0.618 to 1.618 relationship, a perfect Fibonacci ratio. You see it everywhere in the universe: music, art, construction, anything that's out there, you will find Fibonacci's in. It, to me, is the most important indicator out there.
Okay, Fibonacci's, 0.382, 0.618. I'm kind of a 50% guy too. Do you incorporate that in there, or what you just stick with the 0.382, 0.618?
Actually, the 0.618 is, to me, the most important one, but I have a trade setup called Fib 50 trade, and we take that trade off that 50% over and over again. It is the 0.618 is a higher reliable trade, but it doesn't present itself as often as the 50 percentile move does. So every time that stock moves to that 50 percentile, we consider taking the trade in the direction of that reversal, of that retracement.
Getting in a little bit earlier, yeah, I definitely like to use that as intraday as a pullback if I'm, going counter trend or for a reversal in the markets. That's when I really don't even watch the 0.382 or 0.618. Also with the Fibonacci numbers, don't you feel they have more significance when they like coincide with a daily high or low or a weekly high or low?
They do. I call it confluence.
Mm-hmm.
I'm looking for where you've got a confluence of various things happening in the market at one place. So you may have an all-time high hitting at a Fibonacci level. So we just had recently, if you looked at the S&P, we pretty much came into a triple top area. Now, it's not a pure Fibonacci number. It is something that I call a Fibot, which is a combination of Fibonacci pivots. But we were looking at that 211062 level as being a key resistance area. Now, although the first all-time high broke out of it, we maintained it fairly well on the next two hits. So I do agree with that, Joel. Absolutely.
Okay. Now everyone has a different personality when they trade, and some stocks, are move much more than others. When you bring people in to train them, how do you kind of fit their personality with the issues they're going to trade?
I think each person ideally would take a trading psychology test or work with a trading psychologist, and that would be a wonderful way for them to get started. Many traders don't have the luxury or the ability or even how to know to find one. So one of the things that we do is as we go through various trade setups that we teach, you're going to find one that you will naturally gravitate to. But there are really four keys to any setup that you create, and it is the identification of the pattern, the entry rules, the management techniques, and the exit criteria. You have to have all four of those in place for any setup that you trade. And so many traders today I find, because I talk to new ones every week at our events, I find new traders that are just out there throwing money at it and hoping that it works. So I'm going to buy this. When are you getting out? When it goes up? How much? Enough. There's no real plan in place of what they're trying to do. I focus very heavily, we do at Better Trades very heavily, on those four criteria. If you don't have those four criteria set and in place, you're really not prepared to trade the market or that individual stock.
Okay, and what kind of people are you looking for? I remember when I traded down at the floor, there was a firm called Singer Winger, and they used to love former college athletes and high level high school caliber athletes to come in. I mean, part of that had to do with the physicality of the pit, but what particular traits are you looking for when for candidates to train?
Well, once again, I think having that desire is important. I've been saying for over a decade I refuse to drag someone kicking and screaming to their own success. I can help them get there, but they've got to have the desire to do it. And I will, and I say it all the time. If you will extend out your hand and ask for help, I'll grab your whole arm and pull you in.
Okay. All right. And just, final tips, for, traders today in the market, new all-time highs. We just opened up in the index. Any final tips?
I'm loving Apple. I'm excited about the move on it right now. I'm looking for the earnings pop today to see where it takes us to. Amazon with their all-time highs have been wonderful. We've got some great potential on Amazon. Fibonacci tell us that Amazon topped out right about where it did, which was the 400 and let me get you the exact number, 53.72. But we're looking for our next move to 473.62 and 493.49. Very precise, but they're numbers based on fibs. They're not approximates. They're exact.
Okay, we've been on the line with Rob Roy. He's a trading coach with Better Trades, outlining his strategies and what he looks for in traders. Thanks a lot, Rob. We really appreciate it. We hope to have you back on again soon.
Thank you, Joel. Have a great day.